Welcome to Trading Lounge. Today we're going to be looking at the ASX200 and the Nifty for the 26th of September. So with this particular count here, it's not my favorite count. There's things that I know and things that I don't know. So in this case here, as I mentioned before, we do have 5 waves down through here. So we can't kind of ignore that. But I've seen this kind of pattern before where we've made new highs as well. So we'll take all this on board. But if this is going to be an A wave here and a B wave here, then it really needs to fail at this point here. And in terms of failing, we would see the market move lower here. But in terms of failing here, we would need to see this level here, the 6,650 here, as the retested resistance. It's okay just to spike down past it a little bit and then move up from that point. But I won't confirm this. We don't need to confirm this count moving down here unless that number there, that 6650, becomes the retested resistance. When we're looking at CBA, for instance, here we're looking at it in terms of wave A, wave B, wave C here, which is a bullish corrective pattern. So we should see more highs here. So it would be logical to see the ASX200 very close to this count where we have wave 1 and 2 here and wave 3 here, wave 4 pulling back, and then wave 5 to the upside here. So that's kind of what we're looking at. So when we go to I think it's maybe the 4-hour chart here, I'm not sure that we've done yet. So in this case, this would reflect the CBA situation where we're looking for higher ground to unfold. This particular move down through here, we know wave 4s can get complicated, so we need to be a little bit mindful of that. But this 6,650 here is a really nice floor of support here. So we wouldn't want to see this level become the retested resistance at that stage. So we are in an uptrend, so we should treat it like that. But at the same time, we just need to be cautious that wave 4s can get complicated. So we need to keep an eye on the S&P 500 and also the European markets to a degree. So the idea is to understand this particular correction in this particular space here. But just before I go there, I do have another bullish count here which I've been working with, and we've looked at it before as well, which is wave 1 here, wave 2 here, wave 1 and 2 and 1 and 2 and 1 and 2 and 3 and 4 and 5 for the third wave here, and moving up in that direction there. So in that case, I wouldn't want to see a new low below this one here either. In this instance, so we do need a strategy either to go long here as well, but we need it in a safe position to do that. On the 1-hour chart here, if we looked at this correction here with this, then we could look at this as an A wave, a B wave, and a C wave here, and then up for 1 and back for 2, and then moving up higher from this point. So from the top here, we'll talk about strategy now. This may not be the right count, okay? So don't worry about that too much at the moment. But from that top here to this low here, that counts down in 3 waves here. So the 61.8% is back in this little box here. So that means that we can see that this level here, the 6,750 here that cuts through these old highs here, is really the resistance. The 61.8% is not far behind it in that case. So we could say, on the outside that, well, if that 6,750 become the support, then we would be bullish from that point. We'll be going higher from that point, and it would make all of this corrective. But while it's still under this level here, then this wave 4 could get more complicated in that, copying this here, having this as the A wave here, the B wave here at the 61.8% with an A and a B and a C here, and then a C wave over here, and in this sense and getting a little bit more complicated from this point. So this little move to the upside here, I think I may have done it on this tick chart. If not, then I need to look at on another one. not quite on that one. So I'm just going to go to my 20 tick chart here. Just have to bear with me while I just get it in here a bit. So from the low down here, it's a bit dodgy, but I can count 5 waves up here quite nicely in this instance. So I can count, well, it's a bit hard to see, but in blue here, 1 and 2 here, and then light blue 3, 4 here, and then all the way up for 5 here. So we can consider this wave A or wave 1, and the move down through here comes in 3 waves, so we can look at that as wave B or wave 2 here. And this move up through here would be, if we're looking at it as wave B here to wave C here to this box here, this is the 6,740 is the 61.8% retracement level, but that top or this top here at the 6730 area here, then that's a little target zone for this. So in counting this up through here, if we count it up as 1 here and 2 here, and then we can count it up 5 waves up here, and 1, 2, 3, 4, and 5 here for the third wave. This will be the 4th wave unfolding here, and then we go up for the 5th wave here. So once that high comes into place, then we'll sort of start to know where we are from that point. I can't draw on this side of the price, but I can draw back here. So if I drew up here as 1 and 2 here, and 3 here, and 4 here coming back, and then wave 5 up here, that's what we're looking for today on the open, because the S&P is closed strongly, so we'll see that it's already built into this particular trend here, but it's not built into stocks, so we'll see stocks move up, and we'll see CBA here try and cover the gap here. Once it's done that, it may exhaust itself and drop from that point because we're expecting it lower. So once this high comes into play here, then that becomes the catalyst for any trigger to the long side at that point. There would be an A wave, a B wave, and a C wave coming back, and it'll have to move up from that point, so we could take it on the second one. So what I'm saying here is that even though I don't know what the what the larger count is here, I can see here that we'll be looking for 5 waves here, which will create that top there, anywhere between this top and the 6740 area here, and then it will move back down. So it will either move back down here, or it will just have a small correction down and move off. Now, in this correction that comes down here, we're working with group 1 here, so 10, 20, and 30 here. What I normally find, though, if the market's going to be bullish and continue to the upside, well, of course, we would be looking for support on top of group 1, which is number 3 here, the 30 here. But when it pulls back here, what I sort of notice over time is that most of the time, I just need to get a bit more space over here because I need to draw on this side. Most of the time here, when it moves up here like this here and moves up here, most of the time it will just pretty much come back to the number 2 here, the 20 here, okay, the 6720, and then move up from that point. Now, sometimes a bit rare, I see it spike down to the, this is all subtle, but it's really good to know. Sometimes I see it move down to the 15 here because number 5 is the next strongest number. So it will move to the 15 and then move up from that point there and then move up. So it will either do, most of the time it's the 20, but it can do the 15 here. Also, what I need to say here is that if the number 2 here, this is in group 1 here, 1, 2, and 3, if the number 2 here becomes the retested resistance here, then you need to look to short at that point. So under that low here, if that occurs and retests the 30 and then drops, then that's your first short position at that point. So the number 2 here for shorting needs to become the retested resistance. You can do the same here and look to add under the 10 here, and also under the 67 here. So the short here would be the 20 as the resistance, and then the 10 as the resistance, and then look to add the third position under here as the resistance. And your target area would be 6650 on the downside. But obviously you'd want to take some profit on these old lows here, because it will take up too much of your attention at that point. Yeah. And then on the long side, as I mentioned, we would be looking for support on top of 30 here, and then you can also add on top of 67.50, because on 67.50, as I mentioned in the bigger picture, is really quite a strong resistance point, and the market breaking through that will definitely see new highs coming into the up into 6.8 here, where there will also be resistance here as well, but would be on our way at that point. Yes, it would touch that pullback and move up higher, but that's where it would be at that particular point. I also want to have a look at just keeping an eye on the Nifty at this particular stage. So with the Nifty here, I'll just go back here a little bit. So we know that we were looking down here as this triangle pattern to finish here, and we're expecting a move up. I didn't expect it to move so fast, of course, but we could see that it was very strong through here, and then it started to run out of steam here and then fold back. So we're looking at this top here as wave 1 here, or we're looking at it as wave C here of wave C of B here. So and the reason I've got wave C of B here, as I mentioned before, is that this is the actual low here. So it's possible that this here is part of not this triangle coming down, but this one moving up here as an A and a B and a C wave up here. But either way, it doesn't really matter too much at this stage, because once we get enough information from this little the market unfolding in this space here, we'll be able to move forward. So in this space here so far, let's just go in and have a bit of a look at this here. So in the bigger picture here, as a bullish move to the upside here, as wave 1 here, then we would look at the market coming back into this box here at the 50 and the 61.8%. Now that's just a, it's just a target area. It doesn't mean that it's true or anything. It may only come down to the 11,300 here and bounce off that. There's a little gap in here that it may want to cover that and then move up. Also, too, what I want to point out here, because we don't see this very often, is that the market moved up here but didn't really react from here. We normally have the arrival, the reaction, and then the first high above the level. So this is the overshoot pattern here, and with the overshoot pattern, let me just find it here somewhere. Yeah, this is it here. So I normally show sort of the 3 of these, but this one we don't look at very much. So the market doesn't stop at the level here, but just continues to move higher here. So it comes down and bounces and comes through here. But what I wanted to point out here, the distance that it makes above the top here, above the level here, as a rule of thumb only, is the same distance it will make below here. So in this case, this little guide stick I got here, this is the distance above and this is the distance below here, so it comes down to 11,300 here. It's just a rule of thumb, and it's just something to keep in the back of your mind. It's don't lock and load on it, but it's something that just gives us a bit of a rough idea, because it just gives us another target area, that's all. So what I'm actually looking for here, when we have wave 2 here, wave 2 in Elliott terms is an A and a B and a C here, but the thing with it is that the A wave is pretty much always in 5 waves down. It's a zigzag, and then 3 up here, and this 3 up here is a 5-3-5 structure, and then another 5 down here. So this is the pattern that we're looking at here. I don't know if that's the case yet. I will know if that's the case if I get this 5 wave structure here. So 5 waves here will produce, after a corrective move, another 5 over here, and that will give us our A, B, and C wave here. So on the tick chart, which we'll have a look in a moment, it is possible to have this here already as an ABC pattern in this space here. This here, this level here, is the 61.8% mark here, so we can look to go long there. We would have had that up here. Now, then we could bring it down to this one, which is probably safer, but we can bring it a little bit lower here as well. But what I wanted to see here is I wanted to see if we get this other move down through here, then that will give us 5 waves. And if that's the case, then I can put this wave A here, wave B over here, and then we won't take that trigger here. We'll just leave that out of the way at that point. We don't want to, well, that wave B will become the trigger on the upside, but we'll also get a better position than that as well. So on the tick chart here, this is our little move up. We've counted all that, so all that's cool. So in this instance here, we can count this down here as wave A, wave B, and then 1, 2, 3, 4, and 5 here for wave C. So that could be the low here. I don't think it's the case. I'll just copy this one over here. So we're putting this wave 3 here, and I've got wave 4 here. So wave 4 would pull back to the 38.2% retracement level where it is now, or the wave 4 of 1 lesser degree, so in that space. So it's pretty much sort of done that, but doesn't mean that it's, you know, it can't go any higher from here. It's not resistance yet at that 11,500, which is a medium level, which is really important. But also too, when we normally get an A and a B and a C wave, normally the A wave and the C wave would have some equality about it. I'm sure that we can get a rate, you know, if we took all of this as 1 or 100 here, then this would add up to like 40 and then 60 over here, maybe a bit more, but there's probably a relationship. There will be a relationship in there. I don't know what it is. Doesn't really matter. But as a zigzag in ABC, the A wave and the C wave would be roughly the same, but in this case it's not. We've got this long move down here, so it's probably the 3rd wave, and this is probably the 4th wave here, and then we're looking down for the 5th wave to come down. So just put that up there, straighten these up, bit of housework. So yeah, I think that we're just shooting the breeze here, but I think that the A wave here is still down here to come, and that's down at the 61.8% mark here. So I mean, I'll just leave it here for the time being, but in a nutshell, this would be wave 1 here, wave 2 here, wave 3 here, wave 4 here, and then copy that wave 5 down here, which would make the A wave here. That's what I think. And then we need, copy this, we need little A, B, and C here. So will play out across here. We should make a new low over there. So 11.4 would be, let's just grab that there. That's probably the low. So what we could do from that point is grab this top here, put that at the 11.4. You can adjust that, of course. And then we can look for, this becomes the target to the upside here. So well, let's just get this into shape, shall we? So let's just put this wave B here, and don't need that. 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 That, This can go over here, that can go there, that can go there. That looks like it's pretty much done at that point. Don't need that. Well, that was all a bit long-winded, wasn't it? But anyway, sometimes it's nice just to watch me work through things as well. So yeah, wave 5 down here, because we've got the extension in wave 3 here, yep, that means that wave 1 here and wave 5 can be roughly the same length. So we can expect to move down to this area here, and then wave A will come back up and hit resistance here, and wave C here for wave B may not come that high. All this block through here, that's really the resistance in here. So that's where the volume is. So if we can grab that, that's where the resistance is. So it comes into that space. But because that markets they'll just react to history. I mean, history does have a lot to do with that. I mean, it's the past, but it does. It's like if your footy team hasn't won in 20 years, well then, you know, and it's in the final, well then all that 20 years of emotion comes back into play. So anyway, that's it. Thanks, folks. Cheers.
Report unless it's done.
Really?
Just holding up some plates.